Let's continue on with the enrolled agent exam. So if you want to do taxes and get paid for it, you can either become a CPA or an enrolled agent. Enrolled agent is a lot easier test. It's conducted by the IRS. And it's 3 parts. So I'm going to just go through the practice questions of the first exam. This is the individual exam. So if you do taxes for individuals, like people, regular people, not businesses. And there's 18 units, so it's a lot of material to cover. So we'll go unit 1, there's 14 questions. So we'll go through it and we'll talk about it. And I forgot a lot of these things. I just covered it once, but this will just be helpful for me to go through it. So which of the following documents can be accepted as a valid means of identification for a taxpayer applying for ITIN? So an ITIN is an individual tax identification number. So individual taxpayer identification number. So if you're not a U.S. citizen and you don't have a social security number when you were born, then you have to apply for an ITIN to file your taxes. If you're a U.S. citizen, everybody gets a social security number, and that's your unique identifier to file taxes. But if you move here from another country and you don't have a social, then you have to apply for an ITIN in order to file. So it's only available for non-residents and resident aliens, their spouses and dependents who cannot get a social security number. But some people do get social security numbers even if they weren't born here. So if you can get a social, you don't have to worry about the ITIN. It's only for people who cannot get the social. So who can get an ITIN? People filing tax returns who are not U.S. citizens and are not eligible for social security number. And the only reason you need it is to file your taxes. You don't need it for anything else. But let's go to the questions. Okay. So which of the following documents can be accepted as a valid means of identification for applying? So if you apply for the ITIN, you have to supply the IRS with some information to prove who you are. He's got more tax info. Yes, I need to know more. I know, me too. It's very nuanced taxes, and it's something I want to learn more because it's not straightforward. And if you're good at taxes, you could make side money. You can make a lot of money doing tax work. Even if you're not a CPA or EA, you don't have to like, in order to charge people to do their taxes. I mean, you could charge people under the table and no one would probably know. But if you wanted to open a business, you can just work with someone who's a CPA. And if you know as much as CPA, you can get paid a lot of money still. As long as you have a CPA in your firm, then you can charge. Because there's a lot of people who work at CPA firms who are not CPAs. There's a lot of administrative assistants who get all kind of like the paperwork put together. Okay, so what's valid? Notarized copy of birth certificates and passports. I don't think that's true. Color copies of birth certificates and passports. Original birth certificates and passports. Photocopies. It sounds like it would be C, right? Original. So I'm going to put C. We'll check the answers at the end. Let me get rid of that. Okay. Roxana and Baptiste are married and file a joint return. So when you're married, you can file a joint return or a separate return. It's usually better to file a joint return. Their tax refund will be applied towards Baptiste's unpaid child support obligations from an early relationship. So if you married somebody and they had a lot of like debt, they had to pay child support, then that could be a reason you do not want to file a joint return. Because say you get a big refund, that entire refund may go towards what that your spouse owes. If you file a separate return, then your money stays with you, his money stays with him. So there could be reasons to not file a joint return, even though it's beneficial to file one. There could be situations. Okay, so to request her portion of a joint refund, Roxana should file an innocent spouse, as a damaged spouse, as an injured spouse, as an equitable relief. I'm pretty sure it's an injured spouse. I can't remember. I don't think a damaged spouse. I don't think that's anything. Equitable relief, I think, is something different. So I think in this case, you'd want to file an injured spouse, and I'll explain what an injured spouse is later when we go through the answer. Well, okay. You may be an injured spouse if you file a joint tax return and all or part of your overpayment was or expected to be applied to your spouse's legally enforceable past due federal tax, state income. Okay, let's just pick it, and then when we go through the answers, hopefully it'll clarify why we picked it. Mila, age 26, and Leo, age 31, are married, live together. Leo's income was $45K. Mila did not work and had no income, but Mila refuses to file a joint tax return with Leo. Based on this information, which of the following statements is correct? So Mila refuses to file a joint filing jointly. She refuses. Which you can do. You don't have to file jointly. So which the statement is correct? Leo is required to file a tax return. He must file married filing separately. That sounds true. Because he made $45,000. So you have to file a tax return. So he's going to file married filing separately because Mila does not want to file it jointly. So he has to file separately. So if he makes over $5, he has to file a tax return. If he made no money like Mila does not have to file a tax return. And then you could see it is $5, which is a low amount, but if you're filing jointly, and say you were both young people, under 65 years old, the threshold is $29K. So you don't have to file a tax return. Like for example, I think if you're single and you make $13,000 from your job, you don't have to file a tax return. You should file a tax return, but you don't have to. Legally, you don't have to because it's below 14,600. So it sounds like A, but let's just go through the other three to make sure. Okay. They are both required to file tax returns, whether they file jointly or separately. That's incorrect because Mila has no taxable income. So she does not have to file. It's optional. It's not required. Leo is required to file a tax return, and he can claim his wife as a dependent. I know he's required, but can he claim her as a dependent? I'm not sure. I think he could. Neither is required to file a tax return. Well, I'm pretty sure it's A, but C, it could be C too. Like C sounds like it could possibly be, but can you claim your spouse as a dependent? Dependents are either a qualifying child or qualifying relative. The taxpayer cannot be claimed the taxpayer's spouse. So now we know C is definitely not correct because you cannot claim your spouse as a dependent. You could claim your parent as a dependent. You can't claim your spouse. Okay. So 4. This 14 questions. Okay. Which of the following taxpayers must request an ITIN? Okay, a non-resident alien with a J-1 visa and a social security number. Okay, so if they have a social, they do not have to file an ITIN because an ITIN is only needed if you do not have a social security number and you file taxes. You don't need an ITIN. Like if you're 3 years old and move here from India with your parents, you don't need an ITIN because you're not going to be filing taxes. Anyone who does not have a social security number but has U.S. source income. That's not true because if you move here from another country, say you're 16, you don't have a social security number and you make $800 in wages working at a grocery store, you don't have to file taxes. Just because you don't have a social doesn't mean, and you have U.S. income doesn't mean you have to file taxes. It has to be above a threshold, and we know the threshold because if you're in high school, you have to file a single, and your threshold is 14,600. So you definitely don't have to file a return. Okay, so definitely not B. So C, it looks like it could be C. A non-resident alien who must file a tax return but is not eligible for social security number. So I think that would be it. Because if you have to file a tax return and do not have a social security number, then you need an ITIN. What's the all non-resident aliens that are physically present in the U.S. for over 183 days, regardless of immigration status? Well, that's not true, because you could be a non-resident alien and be 2 years old. You don't have to follow the tax term. This confused me a little bit. A non-resident alien with a J-1 visa. Oh no, that's obviously not it. So it has to be C. A non-resident alien who must follow tax term but not eligible. So C. Who? So 4 is C. How long should taxpayers keep the supporting documentation for their tax returns? These kind of things you just have to memorize. So after you file your taxes, how many years should you keep the backup? 4 years, 3 years, 2 years, 10 years. I think it's 4. But you just have to memorize this one. 10 seems too long. And 2 seems you think it's 3? Okay. Alex says B. Well, we'll find out. It's between A and B. Okay, 6. Catalina, age 20, is single and a full-time college student who is claimed as dependent on her parents' tax return. Her parents provide the majority of her support and pay for all her college tuition and books. She earned almost $15,000 from a part-time job, no other income. Is she required to file a return? So I think so, right? Because what's a single? So if you're single and make $14,600 or more, you have to file a return. And she is at that point. So it's probably A. It looks like it's A. Yeah. Because B says no. I'm pretty sure it's yes. It's over 14,600. It says she's only required to file a return if she is self-employed. If you're self-employed, I think then if you make over $400, then you have to file a return. I think that's self-employed. And D is, so if this said 14,000 wages, then D would be the correct answer. Then it would be she should file a return because she'll probably get a refund, but is not required to file. Okay, 7. Isabella files as single, has no dependents or credits. All her income is from wages. Is she required to pay estimated taxes in the current year? So her adjusted gross income from last year was $74K. The total taxes from last year was $9K. She expects her income for 2024 to be $83K. And our tax liability for this year is $11K. So taxes expected to be withheld. So I guess she has a regular W-2 job, and each paycheck they take out for taxes. So that's probably how much they're taking out for the whole year. Which is less than the expected tax liability. Okay, Is she required to pay estimated taxes? That's a little confusing, but yes, she's required to make estimated tax payments. No, she is not required. She is not required to make estimated tax payments because she is not self-employed. Is that it? I think it's C, but I'm not sure. Do you? I think it could be B. It's either B or C. I'll go with B. Because she's not required to make. I forget this one, but if you have just a regular job, you usually do not have to make estimated tax payments because each paycheck taxes come out. But what if not enough taxes are taken out? That's okay. We'll find out. 8. Chris is single and earned $350K as a self-employed software developer. Under the estimated tax safe harbor rules for high income taxpayers, he can avoid underpayment penalty if he pays what percentage of his prior year tax liability? Is it 100, 110? Actually, it's 90. I can't remember what this is. I think if you pay 90% of last year's tax liability, then you won't get hit with a penalty, even if you underpay your taxes. But high income taxpayers, I think it's different. I think it may be 100% for high income taxpayers. It says 110, something about 110. I remember reading. I'm gonna go with C. I think it's not 90% for low income taxpayers, but 100% if you're in the high income tax bracket. 110, I can't, was for something else. Maybe it's for this. I don't know. Okay. What is a normal assessment statute of limitations on tax return on a tax return from which more than 25% of taxpayers' gross income was omitted? So this is saying if you short your taxes, like say for instance in 2018 you reported 100K of income and you pay taxes on 100K, but if we find out that you maybe you underreported, whether you did it on purpose or not, no one really knows, but you might have tried to do fraud, but that's hard to prove. It could have just been an accounting error. So it actually should have been 150K of income, but you reported 100K to the IRS because you forgot there was one customer you did not account for. So you underreported 50K, 50%. So that's what this is. So what's the statute of limitations on tax return when more than 25% of a taxpayer's gross income was omitted? And I think there's no, I think there's no statute. I think you can go back as far as you want when it's above that level. I think smaller amounts there's a statute of limitations. Like you can't go back more than like 6 years or something like that if it's like within 10%. But if it's a high percentage, I know I got a bunch wrong because that's how you learn, right? Number 10. Bibiana, age 28, paid $25.60 in estimated taxes. On 12/10, she closed her business. She is now unemployed and living with her parents. She expects to have a zero tax liability in 2025. Which of the following statements is correct? She closed her business. She's now unemployed and living with her parents. She expects to have zero tax liability in 2025. I think if you have zero tax liability, you're not required to make any estimated taxes. So I think it's B. Even in a prior year, even if you pay taxes in a prior year, or is it, if you had no taxes in the prior year, then you have no taxes in the current year? Okay, I'm gonna guess B. Okay. Alice requests an extension, Form 4868, to give herself an extra 6 months. She chooses not to pay any taxes with the extension because her records are disorganized and she's uncertain how much she owes. On 10/15, when she finally prepares her return, she finds out she owes $3,000 in taxes. She pays the full amount when she files her return on October 15th. What penalties, if any, will Alice have to pay? She definitely have to pay a penalty because even if you file an extension, you still have to pay your taxes by 4/15, even if you don't know how much to pay. You just have to guesstimate it, and probably guesstimate high because just in case you're off. She will owe an interest on the amount owed and a late penalty. Yes, she definitely will owe interest on the amount owed and a late penalty. She will owe interest on the amount owed and a late filing penalty. Well, not a late filing penalty because she filed on time. She filed the extension. As long as she filed the extension by April 15th, there's no late filing penalty. She will owe interest on the amount owed, a late payment penalty, and a late filing. No, did I miss something? She chooses not to pay that. Okay. She will not owe any penalties because she filed before the extended. So it sounds like it's A. I think that's pretty straightforward. Sam, a U.S. citizen and investor who invests on multiple online platforms. The IRS notified one of these brokerage firms that the social security number Sam provided was incorrect. Sam ignores the notices from the firm and does not update his information. As a result, Sam is subject to mandatory backup withholding. What is Sam's backup withholding rate? I think it's backup withholding rate. I think it's 24. And I can explain why it's 24 later, if it is. Okay. Stuff like this, you just have to memorize. Like, there's no rhyme or reason. Other things you can kind of connect the dots and figure it out, but when it's a year or a percentage, you just have to memorize it. Okay, 13. Durand files his 2024 tax return on February 25th, 2025. So that's before April 15th. So that's good. He has a balance due of 800. How long can he wait to pay the amount owed and not incur a late payment penalty? Okay, he will owe a late payment penalty unless he pays tax liability when he files his return. I think you just have to pay it by April 15th. He has until the due date of the return, not including extensions. That sounds like it could be it. He has until the due date of the return, including extensions. No. He does not have to pay the amount due by a certain date because it is less than a safe harbor amount of 1,000. That doesn't make sense. So it sounds like it's B. 14. When does a 10-year collection statute of limitations, his statute of limitations, is what we questioned earlier, for the IRS begin to run? On the date the tax is assessed. On the date the IRS acceptance of a filing tax return. On the date the taxpayer receives the bill. On the date the taxpayer pays the tax. On the date of the IRS acceptance of a filing tax return. I don't know about this one. I think it's A. This answered the other question, no, about statute of limitations. Well, we'll find out, but the statute of limitations, there is a statute of limitations if the amount owed is less than like a certain percentage. If it's above a certain percentage, oh no, there is a statute of limitations. There's no, that's it. There's no statute of limitations when fraud is involved. If you do something illegally, then there's no statute. But if you're 8% off on your calculation, then the statute, then that's when. Okay, but we'll find out. So CCA. So that's good. We got those three right. CCA. Let's do 4. CBAB. Alex was right. C. BAB. 8. Sometimes you answer questions correctly without knowing the answer because it's 1 out of 4, right? So even if you get something right, sometimes it's good to still go over the answer because you might not know why you got the answer. 7 is B. Okay, so let's go to 8. DCBA. Is that 8? D. C. BA. 12. BBA. Okay, so we got that. But I wasn't 100% on some of these. I got 3 wrong. But some of them I was a little iffy on. So let's go 5, 8, and 9. I'm going to turn the AC on. It's getting a little hot. Let's do 5. The one Alex got right, I got wrong. Okay. This eventually we can see it better. So I put A, Alex said B. So the question was, how long should taxpayers keep supporting documentation? So when you file your tax returns, how many years should you keep documentation? I thought it was 4 years. I thought it was 3 or 4. I picked 4, but it's 3. Taxpayers should keep supporting documentation for the returns for at least 3 years from the date the return was filed, or 3 years from the date the return was due, whichever is later. This includes worksheets, receipts, and other important forms. So 3 years, you want to keep records. Of course, you don't have to keep records. Sheesh. But if you get audited, it'll be a headache to reproduce all those records. So 8, I picked C. It was D. It was 110. Okay. Okay. So the question was, okay, Chris earned a lot of money, 350K. So he's a high income earner, self-employed. Okay. According to the safe harbor rules, he can avoid underpayment penalty if he pays what percent of his prior year penalty. So he needs to pay 110% of his prior year penalty to avoid underpayment. So to avoid underpayment, he must pay the smaller of 110% of his prior year or 90% of his expected current year. So say, for instance, in 2023, that's how much taxes you paid, $100,000. And then in 2024, you're expecting to double your everything double. So you're expecting to pay 200,000 of taxes. So if you underpay your taxes, you get penalized and pay interest, and then it ends up being a lot more than you should have paid. So in order to avoid it, for a high income tax earner like this person, he would just have to pay the lower of 110% of his prior tax penalty. So 110% of 100K is 110K. Or 90% of his current year tax penalty. 90% of 200K is 180K. So the lower of those two numbers. So in order to avoid a penalty, he would only have to pay $110,000, which would be way below what he is supposed to pay. He's supposed to pay $200,000, right? But it's kind of giving a little leeway to these high income earners who have really volatile payments. It just makes things a little easier. Because imagine if you had 500,000 revenue, you paid $100,000 of taxes, right? And then in 2024, it just blew up your business. Like you weren't expecting this, and your business went from 500,000 revenue to 5 million of revenue. Then you'd have to pay like $1 million in taxes. And could you imagine how much penalties you would have to pay? You have to pay like $100,000 of penalties because you underpay your taxes so much. So they're letting you just pay just whatever was the prior year, 110% of the prior year, even if that is a lot lower than the current year. Or, I mean, if you expect the current year to be real low, like if you expect the current year to be only 10,000 of taxes, which is a big drop from 100,000 of taxes, then you just have to pay 90% of 10,000. This is only for high income earners. I think 250K of income or more for the year. If you're a low income earner, it's less. You don't have this. Okay. So I knew 110 was somewhere. I couldn't remember what it was. Okay. So let's do 9. 9, I did A, it's actually C. So here's the question. What is a normal assessment statute of limitations on a tax return from which more than 25% of a taxpayer's gross income was omitted? So the answer is C, 6 years. So if you omit more than 25% of gross income, the IRS has 6 years to audit you and get you to pay. So like I said earlier, if you reported 100K of gross income in 2010, but it turned out it was 200K, you really underreported. It's done. It's too far in the past because it's only 6 years they could go back. But if in 2021 you report 100K, it was really 200K, then they could audit you and then force you to pay taxes on the 200K. But there's something with fraud involved. If there's fraud, I don't know how you'd have to prove it, but so I think that was helpful. I think I got something out of that. This is all you need to do. If you can answer the questions, because these are similar questions on the exam. I'll be right back. If I just keep making videos on this EA exam, then we could just all take the test and start charging people for taxes. Because once you pass the EA exam legally, you can charge people to do their taxes, and we could start our own little company and charge people. That's how you make money. You can't make money by working. You have to make money by letting people work underneath you and collecting. So if you run a business, but you just find people that need their taxes done, and you get employees, and you just kind of manage the process. That's how you scale. What rule are you talking about? It applies to all income. The 110% rule? The 110% rule is only for high income earners. It's called the safe harbor rule. So safe harbor rule, taxpayers can avoid making estimated tax payments by ensuring enough taxes are withheld. There's a 90% rule, pay at least 90% of the taxes owed for the current year. The 100% rule, pay 100% of taxes owed in the previous year. That's for regular income earners, not high income earners. There's a $1,000 rule. If you owe less than $1,000 in tax after subtracting withholding the credits. No tax liability. If a taxpayer had no taxes in the previous year, they are not subject to underpayment penalty for the current year, regardless of amount due. And only for high income tax earners, with adjusted gross income over 150K, or 75K if married filing separately. So if you're married filing separately, and say you make 100K and your wife makes 20K, then you apply to this rule because you're over 75K. And then there's the 110% of previous year. Is that what you mean? Is that what you're talking about? You're going to be able to take this test, Alex. You seem to really follow this pretty well. So here's an example of a safe harbor rule for high income tax earners. If the taxpayer's adjusted gross income was more than 150, so they're considered a high income earner, they must pay the smaller of 90% of their expected tax payment for the current year, or 110% instead of the normal 100%. So if you're not a high income tax earner, say Jim salary is 90K and Joe is 175K. This is people who have their own business, not if you work at a company. So let's say 2023 taxes, $20K, $60K. So in order to avoid a penalty in 2024, there's multiple ways to do it, but one way to avoid paying a penalty is you have to pay estimated taxes. Jim has to pay estimated taxes of 20K, which is equivalent to his 2023 taxes. Joe has to pay 60 times 1.1, 66K. He has to pay 110% of his prior taxes in order to avoid, because just say, for instance, in 2023, Joe paid 60,000 of taxes, right? And in 2024, say he also paid 60,000 in estimated taxes. So every quarter, if you're a small business owner, you write a check to the IRS for taxes, and your accountant usually tells you how much. So your accountant, in the beginning of the year, what they did was he gave me 4 slips, 4 tax slips. That would be $15,000 on each slip, and then the first slip was due 4/15. The next slip was due 6/15. The next slip was due 9/15, and the last one was due 1/15. So I have to mail a check to the IRS for 15K by April 15th. You would include the slip with it so they can apply it to the correct return. You could do it electronically too, but when I initially did it, I was doing it by check. So if I in 2024, if I'm Joe, I'm a high income earner, and I sent $60,000 of estimated taxes to the IRS, which is equivalent to 2023. If I ended up owing 100K in taxes because my business made more money, I would get hit with a penalty. Jim would not get hit with a penalty if Jim had 100K of taxes, because Jim had to only pay 100% of his 2023 taxes to avoid penalty. Joe 110%. So that was unit. So you can see in unit 1, I initially did the questions. I got 5 wrong when I initially did it. Today I got 3 wrong. Let's see, 5. I did get question 5 correct the first time I did it. Let's see, I got 5, 8, 9 wrong. I got 8 wrong again today. I got 9 correct. I put C last time. This time I got 9 wrong. But that's kind of a learning process. You learn, you forget, you relearn. Okay. So unit 2. Okay, so okay, 25 questions, unit 2. Hope people are getting value from this. I sure am. Unit 2. You'd be surprised, like, you think, oh, what do I need to know this? My accountant needs to know it. But by knowing things like this, it helps you in a lot of ways. So this is unit 2. Unit 2 is determining filing status and residency. That's a topic. Okay. So question 1. Okay, let's go. And let me know in the comments if you want to talk about something. We'll stick with this instead of doing like stocks. It's just easier for me to do this on a live stream than by myself. Okay, Elvira's husband died in November. She has 1 dependent son. She did not remarry. What filing status can Elvira use? So she definitely can't use married because your filing status is based off of the last day of the year. So if on December 1st I was married and December 31st I was a widow, then I'm a widow. It's whatever it is on the last day of the year, not throughout the year. So she's definitely not married. She's definitely not A. She could be single. But or head of household. But I think since she became a widow that year, she would probably have to. It's good to hear from you again. Hey, Tomas. Yeah, thanks for joining. Yes, sometimes it's hard with life to do some of these streams. A qualifying surviving spouse is a spouse that becomes a widow or widower that year, and I think the next 2 years, and then after that, after 2 years after become a widow, if they're still not married, then I think they have to choose either single or head of household. So I'm pretty sure it's 6. Okay. Ezekiel and Kendra are married. They choose to file separate returns because the IRS is auditing Ezekiel for a previous tax issue. So they filed their marriage filing separately returns on time. A few months after filing their separate returns, the audit is over and Ezekiel's previous tax issue has been resolved. He then wishes to file an amended 2024 return. Filing jointly with his wife so they can claim the earned income tax credit. So that's a benefit to filing jointly, is that you can claim the earned income tax credit. And a tax credit is a credit that lowers your income. When your income lowers, then that means you pay less taxes and you get more money back. But you can't always amend. I'm not sure in this situation if you can. I can't remember, but okay. So what's correct? Okay. Taxpayers are not allowed to change their filing status to claim the EITC. I'm not sure. Okay. Ezekiel and Kendra can amend their MFS returns to MFJ in order to claim the EITC. That could be it. They can amend their returns, but they cannot claim the EITC on amended return. Could be that too. I'm not too sure about this one. Kendra cannot file jointly with Ezekiel after she has already filed a separate tax return. Yeah, I'm just gonna have to guess on this. I can't remember the nuances, but they choose to file separate returns 2024 because IRS auditing Ezekiel previous tax issue. I'll just go with B. We'll find out. Tanya's divorce became final in October. She has sole custody of 2 children who live with her the entire year. They're both under 18, and she provided more than half of the costs for their home. What filing status should she use? So if she's divorced, she can't do married filing separately. I guess she could do single, right? I don't think she could do QSS because QSS is if someone dies, not if you're divorced. Head of household. To claim head of household, you have to not be married, and you need to claim someone as a dependent. So I think it's C, but it could be A. But it says what should she use, not what can she use. So I think she could be single, but she should do head of household because she'll get the most benefit from that. Boy. Nikki's marriage was annulled on February. She filed jointly with her husband in the previous 2 years. She has not filed her 2024 tax return. She has no dependents, which is correct. She must file amended returns, claiming single filing status for all open years affected by the annulment. She will be eligible as single for 2024. Does she have to file amended returns? She is not required to file amended returns. She can file jointly with the husband in 2024 because she was still married to him during the year. No, it's your status at the end of the year. She is not required to amend any returns. She must file as married, filing separately in 2024. I don't think she can do that if it's annulled. She is not required to file amended returns for prior years, but she must file a single in 2024. Is she required to amend her returns from an annulment? I don't know if she's required to amend her returns from an annulment. You know what an annulment is, right? When two people get married and then realize that it was a big mistake, and then they get annulment, which makes the marriage as if it never happened. It's not a divorce. It's as if it never happened. They were never married to begin with. So if you get an annulment and someone says, "Were you ever married?" you can say no. You don't have to say yes, but annulment. I'm gonna go to A. I'm not 100%. It's either A or D. 5. Taxpayers are considered to be married for the entire year if the spouses had their marriage annulled during a year. No. They're legally separated. Okay. So they're considered married for the entire year if the spouses had their marriage annulled during a year. I think it's B. It isn't. It is it an omen like a divorce in all other ways besides the fact that you know there's just it kind of just destroys all the records of the marriage. What do you mean? Is it an omen like a divorce? It's kind of like getting your record expunged. If you're young, like say you're 15 and you got caught with marijuana on you, marijuana probably wouldn't be a penalty, felony. Say you're young, you're 15, and you hang out with an older crowd, and you broke into someone's home, and you stole some money from them, right? And you get a felony on your record. When you get a felony, you're kind of like done with you. No one wants to hire you, but you could get it expunged as if it never happened. So even if an employer looks at your record, he will not see that you got arrested and it was expunged. It's like it never happened. It's kind of like that with an annulment. Even though you technically got married, annulling it as it makes it like it never happened. It wipes it off the record. Yeah, I'm pretty sure it's B. That's only going to make sense. Let me because so to be married for the entire year, if it's annulled, obviously they're not married for the entire year. If you're divorced on December 31st, then you're divorced for the whole year, because whatever your status is on the last day of the year is your status for the entire year. And if one spouse dies and the other does not remarry, you're not married. You're a QSS, qualified surviving spouse. But when you're legally separated, you're technically still married. I'm pretty sure. It's kind of like if you're married to somebody, but you live in separate residence because you don't get along anymore and whatever. But you didn't divorce. You don't want to go through the headache of divorce, but you just don't want to live with them. One child lives with one spouse, so you're still married. I'm pretty sure it's okay. In 2024, Clarence took legal and physical custody of his 10-year-old grandson. Brayton's parents were both in jail and do not have the right to claim Brayton as a dependent. How long must Brayton live in Clarence's home for Clarence to qualify for head of household status? So I think in order to qualify as head of household, I think at least half the year. So if you want to be head of household, you cannot be married. And you have to have at least one dependent who lives with you half the year or more. So I think it's B. Because if you're head of household, if that's your filing status, there are tax benefits. Yeah. Okay, Madison and Franco are not married and do not live together, but they have a 2-year-old daughter. Madison and a daughter lived together a year. Franco lived alone in his apartment. Franco cashed for his daughter 2 days a week. Madison earned $18,000. Franco $58,000. And Franco paid over half the rent and utilities for Madison's apartment where his daughter lives. He also gave Madison child support and extra money for groceries. Franco does not support any other family member. Which statement is correct? Franco can file as head of household. I don't think he can because someone has to, his dependent has to live with him for at least half the year. Madison can file head of household. I don't think she could because she doesn't pay. She does have a child more than half the year, but she doesn't pay half of the housing expenses. It looks like Franco does. Franco Madison can file jointly. I guess they can file jointly. Neither Franco nor Madison can claim head of household filing status. I'm confused. It's either C or D. I think it's D. Camille is 26-year-old student. She came to the U.S. in 2014 from France on an F2 student immigration visa. With her father while he was completing his doctorate. They remained in the U.S. in the same status until he completed his doctorate in 2016 and then returned to France. Camille re-entered the U.S. as a J1 student in 2022 and has not left the U.S. nor changed her immigration status. While working on campus as a part-time tutor, she earns $15,700 for federal tax purposes. What is Camille's residency in 2024? So 15,700. How much is so she earns over 14,600, so she'd have to file. I think she's a non-resident alien. Is it not a resident alien? I think it's a non-resident alien. Hey. Tatiana is 41 years old and divorced. She follows as head of household and has 2 children. She's a citizen of the U.S. and a legal U.S. resident. She lived in Canada for the entire tax year and earned all her income working in Canada. She earned $63K in 2024 and plans to itemize her deductions. Which tax form should she use to report her income? So this is interesting. You don't have to actually live in the U.S. You could live in another country and make money in another country and still file in the United States. What's it? Form 1040. It's used by U.S. taxpayers to file an income tax return. So I know SR is senior. It's the 1040 form, but I think bigger font. That's the only difference. It's for older people. So we can ignore that one. 1040 NR. That's for non-resident alien. What's 1040X? Oh, it's to amend the previous 1040. Getting tired. Tanya she's head of household 2 dimensions. A citizen in the U.S. and a legal U.S. resident. She's a green card holder. I think it's a 1040 because it says she's a legal U.S. resident. So I'm gonna go with A. Let me know what you guys think. When may a taxpayer amend a joint tax return from marriage filing jointly to marrying filed separately after the original filing deadline? So filing jointly to filing separately. Never. Marrying filing jointly to marrying filing separately. Only within a statute of limitations for filing amended returns. Only when a marriage has been annulled. And a state's personal representative may amend a joint return to MFS if the decedent if elected by the swearing spouse. What do you think this is? This is it's, when can a taxpayer amend marrying filing jointly to marrying filing separately? Jointly. I'm gonna go with never. I don't know why. I think it's hard to remember when I looked at this one. When I went through this. Okay, a U.S. citizen who's married to a non-resident alien can file a joint return as long as both spouses sign the return and agree to be taxed on their worldwide income. Are living overseas and not planning to reside in the United States, have valid security numbers, are physically present. That's the thing in the U.S. Like, if you file a tax return in the U.S., say you made $25,000 in at your job in the United States, you can't just report $25,000. You have to report your worldwide income, not just your income in the United States. So that's why a lot of people from other countries don't want to file their taxes in the United States, because then they have to pay so much in taxes. I think it's 11. Sign the return and agree to be taxed on their worldwide income. Bear light. Well, I'm going through the enrollment agent test. So there's 18 units, and each unit, they give a lot of information about the test, but the questions, if we understand how to answer the questions, we could probably pass the test. So these are the questions that are going to be similar to on the EA exam. So we're just trying to like learn it so we can pass it. Okay. How did the market do today? I didn't even. Wow. Bitcoin did well. Lumen 7%. Meta is almost at 700. That Netflix turned out to be a great investment. That's one of my better. I think that's my best return. Netflix. Let's see. It's my best return. So Netflix 220% return. I put 118 shares. I'm so freaking tired. Yeah, so for Netflix, I bought 118 shares. It was 387 a share, and I bought it in 2022. And right off the bat, like 3 months later, I was down 50%. It went from 387 to like 180 real quick. So I was down on by almost 60%. But it's come up quite a bit. Now it's $1,200 a share, and my 45K is 146K. I'm really happy with that investment. That's my biggest percent gainer, Netflix, 220%. Apple was the biggest, but I mean, at one point, Apple was 250%. I was up 250% with Apple, and I was down 50% with Netflix. And now Netflix is beating it. My other portfolio, new was up almost 300% at its peak. I do own different lots of Meta. So in my initial, I bought Meta in 2017, so I'm up about 400% from 2017. So I think I put like 20K, and now it's 80, 90K. But then I put another. I bought Meta when it was 170 a share. I bought a lot of Meta. You know, this is just what I currently owe. I bought it at. I bought it 170 a share, and then I bought it again in 2022 at like 315 a share. So when I bought it in 170, I didn't have as much money to my name. So I think I only put 40K into it. So by 235 shares. And when I sold my business, I bought 100K of Meta. So these are my cost basis. Shares. Jeez. Getting tired. I don't have time focusing. So yeah, should have just kept with my strategy. My strategy was just put money in Meta in my retirement portfolio. Nothing else, just Meta. I put it would have had like $10 million if I did that. Of course, I couldn't just stick to my strategy. So the current price of Meta is $6.98. going on? Meta. So that's AB. Yeah, so I bought 235 shares in 2017 at 170 a share. It's currently 698 a share. So my initial cost. So when Meta was well, it was Facebook at the time, but 170 share, I bought 235 shares, which cost me $40,000. Now it's 698, so that 40,000 is 164,000. So I'm up 311% on that investment. And then when I sold my business, I bought 100,000 of Meta. So I got 317 shares at 315 each. Once again, right off the bat, I was down like 70% because it fell to $89 at one point. I wish I would have dollar cost averaged. And yeah, and now it's 698 a share. So I'm up 122% on that. So that turned out good. But it's interesting how things change so much. Netflix is my best performing stock. Costco was it's up 185%. News come down. Shouldn't have got Lumen. That was a bad. Okay. What do you think is the best way to perform a sophisticated cleansing exercise for my portfolio of home lizards? Uh, okay. 12. I'm tired. I'll be right back. I gotta go to bed.
So it will transition the transition paper.
Okay. I was falling asleep there. In return, I will give you an invitation to visit my museum in South Dakota. Yeah, you're very funny, AB. You have an interesting sense of humor. Okay, 12. Okay, Liza and Stuart were married for many years. Stuart died in May. Liza qualified for marrying to file MFJ in the year her husband died. Okay. So she can file marriage filing jointly the year her husband died. That's good to know. And Liza signed the tax return as surviving spouse. She did not remarry after her husband's death. She has one dependent. Which filing status should Liza use for 2024? You could do QSS the year your spouse dies and also the next 2 years. So QSS. Yeah. 13. So a lot of questions, this one. 25. Which of the following statements is correct regarding head of household status? A taxpayer must be unmarried to qualify for head of household status. That sounds correct. The taxpayer's spouse must be deceased or a non-resident alien. I think they could just be divorced. I don't think they don't have to be deceased or non-resident. A dependent parent does not have to live with the taxpayer to qualify. So if you have a dependent, in order to qualify as head of household, you need a dependent to live with you at least 6 months out of the year. And this says they do not have to live with them. Okay. I think that's not correct. The taxpayer must have paid roughly half the cost of keeping up the house for the entire year. That's definitely correct. So I think it has to be D. Because when you're head of household, you're not married, usually. Although you could be separated and have your own home, and say you have 2 kids, your daughter lives with you, your son lives with the father. So you don't have to be unmarried. You can be married and still qualify head of household. I'm pretty sure. Okay. 14. The married filing separately status is for taxpayers who are married and choose to file separate returns. Yes. Legally, no. Or unmarried. So I think it has to be A. What apps do you guys use? Use Reddit? Isn't Reddit a fun app? Okay, 15, okay. Rose, age 65, Lionel, age 72, were married on December 26th. They have no dependents. Rose, wages of $2K. Lionel, Social Security of $19K. Lionel wants to file jointly, but Rose wants to file separately. Okay. So if Rose wants to file separately, Lionel has to file separately. You can't file jointly unless both parties agree. Lionel must file a tax return using the MFS status. Rosemary is not required to file a return. Marriage filing separately. Let's go back to these notes. So if you're married filing separately, you have to file a return if you make $5 or more. So Rosemary is required to file a return. Okay. Lionel may claim Rosemary as a dependent as long as she does not file. You cannot claim a spouse as a dependent. We already talked about that. Okay. Lionel and Rosemary are both required to file returns, and they must both file marriage filing separately. Yes. It has to be C, right? $16. All of the following individuals are required to file an income tax return except a taxpayer who owes household employment tax for a nanny. Taxpayer. Does that mean all the following are required to file an income tax return except a taxpayer whose household employment whose household employment tax? Taxpayer who owes household employment tax for a nanny. Okay. A church employee who is exempt from FICA taxes to earn $100 of wages in 2024. What's the rule for church employees? Hold on. Got the rule for church employees. All the following are required to file an income tax return except. A 6-year unmarried taxpayer who's blind and earned $22,000. 26-year taxpayer with 800 which wages. I'm not sure about a church employee. It sounds like a low salary, but okay. 17. Adrienne and Troy are married and live together. Adrienne earned $1,900. Troy $72K. Adrienne wants to file a joint return. Troy refuses and wants a separate return. Which of the following statements is correct? Adrienne can file a joint return. No. Adrienne can file a single because Troy refused to sign a joint return. I don't think she can do single if she's married. Adrienne does not have a filing requirement because her income is below. Because if Adrienne makes $5 or more, she has to file. So it's D. I need my second wind. Okay, 18. Which dependent relative may qualify a taxpayer for head of household filing status? An adult stepdaughter who lives in her own apartment who's supported by a taxpayer. A cousin who lives with taxpayer all year. Parent who lives in his own home and does not live with an out taxpayer. Cousin who lives with the daughter. I think it might be B. 19. Harish is 39 years old and has lived apart from his wife since 2024. Their divorce is not final at the end of the year, and they were not legally separated under separate maintenance decree. They have 2 children, a son, age 15, and daughter, age 16. After Harish and Eleanor split up, their son lived with Harish. Their daughter lived with Eleanor. Harish provides support for the minor child living with him. Eleanor refuses to file jointly with Harish in 2024. The most beneficial filing status for Harish is for, I think it's head of household, right? Bailey is 18-year-old high school student. In the last year, she worked at a toy store during Christmas, earned $1,400 in wages. She also received $4,600 scratch off tickets. Her parents claim Bailey as dependent on their joint tax term. Does Bailey have to follow her own tax return? Yes, because the amount of unearned income. No, because the combined income. I think it's A. I think it's unearned income. We'll talk more about unearned income when we go through the answers. Which of the following dependency relationships would not qualify a taxpayer to claim qualifying surviving spouse? So a foster child does not give you QSS status. Not sure why, but Alex's younger brother Sebastian is a full-time student. Sebastian lived with a friend in January, February, from March through July. March, April, May, June, July. Sebastian lived with his sister, Alexandria. Sebastian moved back in with his friends and stayed with them for the rest of the year. However, since Sebastian didn't have a job, Alexandra gave him money every month and provided the majority of his financial support for the entire year. Alexandra has no dependents, which the following statements is correct. So I think she can do head of household. Since he lived with her at least half the year. Louise legally separated from her husband in 2024. They share custody of a 13-year-old, which the following facts would prevent Louisa from filing head of household. Louisa has maintained separate residence from her husband since 2024. Her son's principal home is with Louisa. Which of the following facts would prevent from filing as head of household? Louisa says with Louisa's parents assisted her with 40% of her household costs. Louisa's son lived with her for 4 months. Looking tired. Only 2 more. Elizabeth and Sirius were married in 2020. No children, no dependents. They split up after 2 years, but never officially divorced. Although they have lived apart since 2024, they are neither divorced nor separated. Which of the following statuses can they use? They could do marrying filing separately or marrying filing jointly. I think just be. Huang is an international student in the U.S. on F1 visa. Arrived in the U.S. in January. It was president U.S. all year, studying at Yale. How long is he exempt from the substantial presence test? Oh, I think it's 5 years. So tired. ABCA. See. So I got 2, 3, 6, 11 wrong. The first time I took it, I got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 wrong. That just shows you how you have to go through all the material. So easy to forget. My husband died November 3rd. She has one dependent. She does not remarry. What filing status can she use? I put C, qualified spouse, but it's actually A. If our spouse died during the year, so she is considered married for the entire year. So if your spouse dies during the year, you're considered married for the whole year. 5. Taxpayers are considered to be married for the entire year if I put B. If the spouse are legally separated, no. If one spouse dies during the year, yeah. So if one spouse dies during the year, you're considered married for the entire year. Seven. I put D. It's actually A. Clarence took legal custody of his 10-year-old grandson. Okay. Well, I'm having a hard time focusing on this. Fall asleep here. Okay. Well, I'll try to do another one tomorrow, maybe. Thanks for joining.